We've got Ruslan on stage. Welcome to the show, Ruslan, and welcome to the Roll Up TV. Congratulations on the extended launch. How you doing today, man? Yeah, things are going well, man. It's been a good stream, and you are our last guest. Certainly not least. I think our audience would appreciate getting to know you a bit before we jump into what you're building. So maybe tell us your crypto story. Tell us your background.
Sure.
Why are you the guy to build a perp stacks?
Oh. So, as for myself, basically, I joined crypto full time in 2021, right? When I joined Revolut. Revolut is the largest European neobank. It also has a large presence in crypto with over 10 million crypto users. I don't think many people realize, but in reality, Revolut is one of the biggest crypto players globally, right? And probably the biggest crypto player in Europe. And there I was the head of crypto operations, essentially responsible for the P&L of the crypto department. Then when I joined back in 2021, essentially crypto department was just a very small team, right, with a very simple buy and sell product with a dozen of coins launched, right. And essentially my responsibility was to grow the department, define the roadmap, launch new products, hire the team, and I've been doing that for 2 years. So when I was leaving, effectively, it was a relatively big business, right? Even for the size of Revolut, with over 1 million of active monthly crypto users, right, who were transacting hundreds of millions of volume, right, on spot. And essentially, I left in 2023 along with a couple of my colleagues. So essentially, in total, at Extended, we're 10 people team, and eight of the team members are my former colleagues at Revolut, right? And effectively, we decided to build Extended, right? With Extended, we have a very simple idea, right? We want to build essentially a DeFi perps exchange, right? With integrated cross-asset collateral margin with perps, spot, and integrated lending markets. That's on very high level.
Amazing. I think we see more and more perpetual exchanges, and each time there's a little bit of a differentiator. Maybe it's a new asset class, maybe it's a different functionality, maybe it's a different user experience. What is the differentiator on Extended versus some of the other existing perpetuals exchanges?
Yeah, sure. So look, the biggest item on our roadmap is to essentially launch cross-asset collateral margin, right? Meaning that users will be able to post non-stable coin assets, right? Including, I don't know, LBTC, WBTC, wrapped, ETH, whatever we support as a collateral to trade USDC settled perps, right? And essentially that will also open up as an opportunity, right, to effectively launch a spot market later on, and to have the unified margin across multiple essentially business lines, right? Which will be perps, obviously, what we currently have, what will be spot, right? And then we'll also we'll have an integrated lending market. Once you have that core foundation, right, essentially you can add any other products on top of the unified margin if we decide to do so. And that's
Ruslan,
like differentiation from the competitive roadmap.
yeah, you got to think that the experience built working at Revolut provides you guys just systematically internally a differentiator from the way that you guys operate, chemistry as a team, also just experience building these products at scale. Was there any specific like story or experience working at Revolut that kind of led you to build Extended? So you've got this idea, you've got the differentiator that you mentioned now, but kind of just like rewinding a sec, was there a specific moment or kind of experience that you thought that this was the right path, and how did you kind of gather your teammates to make the jump?
Yeah, there was actually like a very specific moment which I remember. So back in late 2022, right, we as Revolut were in discussions with many players in the space, right, discussing various like collaboration opportunities, just exploring what we can do together, etc., etc. And obviously, as part of those discussions, we also had multiple calls with FTX back then. And I remember that basically we were just having all those conversations. I don't even remember like the specific topics or the opportunities that we're exploring, but effectively the entire narrative was that they were ready to conquer the world, right? And that effectively they were super positive, super bullish, optimistic, like that they are the best, etc., etc. And then, like, just probably a couple of days after another call like that, they crashed, right? And at that point, like, I just had a very simple idea, right? That basically you can recreate that experience, but you can effectively completely remove the trust assumptions from the operator of the exchange, meaning that all the transactions will be settled on chain, right? Like all the orders, trades, etc., everything will be signed, and effectively custody will remain with the users, right? And back then, basically, I just approached a couple of my former colleagues with that idea, the guys who I thought are the most relevant, right? So the guy who was building a Revolut exchange, right? And then effectively the head of engineering of the crypto department. And that's how we started off, right?
So funny, man. I mean, I was just with a friend yesterday who was like, man, I finally got my 10 grand from FTX. Took me so long, and I kept getting all these spam emails of telling me to connect my wallet and claim this from this email. And just the lasting impact of FTX continues to just amaze me across different areas of the industry, from builders like
Yeah,
yourself. Yeah,
that's quite crazy. Honestly, I stopped reading those emails, right?
yeah. And I still get them from Celsius scammers, people trying to
Yes.
scam me from Celsius. And I was like, dude, I didn't even have funds on Celsius. I mean, maybe I had an account, but all right. So let's get into extended. You guys chose to build this on Starknet. Why? Why Starknet? Why is this a good place to build? And how does it enable the product experience that you're looking for?
Yeah, look, it's very simple, right? Like when it boils down to the core principles, effectively, we don't want to control the settlement layer, right? We want the settlement layer to be independent of us, right? Meaning that essentially we don't want to build our own chain, right, on which the transactions will be settled. We want it to be an independent ecosystem, right? So that effectively the trust assumptions with the user in regards to the user funds, they are not with us, they are with the chain, right? And we merely serve as an operator of the exchange. We don't have access to the user funds, right? There is no way we can effectively impact how the transactions are settled, right? Then that's the first principle, right? The second principle is that we require high throughput, low latency, right? And the chain needs to be performant. I think among the existing chains, right, probably in the EVM ecosystem, right, Starknet would be the only one which would be capable to meet our requirements in terms of throughput and latency. So I can give you an example that when we started our migration on the first day, when let's say 10 or 20% of our users migrated, right, we're hitting 200 trades per second. And I don't think we would have been able to settle that amount of trades, right, on any other public chain. And we have a clear path how to 10x it, how to 20x it, right? So effectively, I would say that the choice boils down purely to tech, right? Now, obviously, from the user standpoint, essentially the way we designed it is that the user doesn't need to interact with Starknet at all in case they don't want to, right? So essentially they can connect an EVM wallet, they can do a deposit from any EVM chain, right? They can do withdrawal to any support EVM chain. Effectively, Starknet for now is mainly a settlement layer, right? And probably like 95 or even maybe 99% of our share, 99% of our existing users, right, are actually non-Starknet users or just coming and trading on the exchange.
Got it.
Got it. Yeah, I mean, I think there's pros and cons to the chain thesis. I just like Hyperliquid is the example of they launched their own chain. They wanted to do it all their own way.
Yes.
You guys are taking a different path. You think it's viable to compete with something that's on its own chain, basically.
Yeah, we do think like it's not a. I don't think it's a better or worse solution, right? There are pros and cons to each of them, right? Effectively, the way we see it is that the funds will be effectively secured by Starknet, as well as the settlement will be secured by Starknet. Now, imagine that, let's say by the end of the year, right, we have that cross-asset collateral unified margin, where effectively we support spot, lending, perps, and it's all on Stark. The settlement of all those products is on Starknet, right? There is nothing blocking us to launch our own chain, EVM compatible chain on top of that product while retaining all the user funds on the Starknet, right? And then we could also expose our margin logic, let's say as an ERC20 token to that chain, right? So yes, like we've chosen a different path in terms of the settlement, but that doesn't block us to launch our own chain in the longer run, right? Which will be just on top of our existing solution.
And so could you break that down a little bit? If you have your own chain, but then you use another chain like Starknet for settlement, what is it that is happening on your chain? How do you split the two?
Yes, so basically, currently the operator of the exchange is centralized, right? So we are running a centralized matching engine, right? A centralized liquidation engine. And then there are on-chain validations of the trading logic, which are happening on-chain, right? Now, if we were to launch our own chain on top of Starknet, we could distribute the operator of the exchange, right? Meaning that there would be multiple or many parties running the operator of the exchange, which is matching, liquidation, all the other services which are related to perp, spot, borrowing and lending markets, as well as we could have our own arbitrary logic, which is happening beyond matching and beyond trading. Right?
Is this effectively an L3, like a chain on top of Starknet?
I mean, it could be NL3, right? It could also work similarly to L1. It would be just basically a set of logic, business logic, which will be run in an arbitrary way, right? And the validators of that logic would be effectively validators of the extended ecosystem, right?
Yeah. Ruslan, I'm curious, how do you guys go from where you guys are today to $1 billion a day of trading volume? What is that? What is the path that you see? This, like, what is going to be required of yourself to get there?
Yeah, look, so I think it's a couple of things. If I think about, probably it's three main things, right? What the first and the most important is that our exchange is stable, right? And we have decent liquidity, right? The second one is that we continue pushing on the product, right? And effectively continue releasing features that people like and use. So essentially, the next feature which we're working on is that we'll allow users to tokenize their vault shares. Like we have a vault on top of extended, right? And essentially users will be able to use assets which are locked inside of the vault as a collateral on the exchange, right? That will be our first step to support cross-asset collateral margin. Then as the next step, we'll add other spot assets to be supported as the collateral, right? So effectively pushing through the roadmap. And thirdly is just our approach to go to market, right? Basically, we're doing it purely organically. So we're not doing any paid go to market, like we're not paying affiliates, we're not paying market makers, etc., etc. We're just talking to the relevant people in the space, right? Trying them to get to use our products, explaining our roadmap. And I think we'll be pushing that roadmap further, right? So far, it's like it proved to work, right? We just need to see 10x, 20x, 100x.
Yeah. Yeah.
And so when you're bootstrapping this initial ecosystem of market makers to provide liquidity, bootstrap trading activity, you mentioned you're not paying these guys directly. You know, is there an incentive mechanism at play here? And what is the value proposition? What is the pitch?
Points.
You know?
Yeah. So, I mean, to start with, right, there are three types of market makers on the exchange, right? One is our vault, right? The second one is our internal market maker, which is independent of the vault, right? It's just basically we run a market maker. And thirdly, there are external market makers, right? As for the external market makers, basically there are two types of incentives, right? The first one is rebates, right? And the second one is points, right? I would say that we see a clear differentiation between the guys who mainly care about rebates, right, and the guys who mainly care about the points, right? But they're both types of players. And then, like, it just organically scales, right? Like, as soon as you start getting more taker volume, right, more market makers come and existing market makers start scaling, right? So basically it just goes hand in hand, right? Like, because I think otherwise it would be super inorganic, right? Imagine you had, like, I don't know, the best liquidity in the space, but if you don't have anyone to use that liquidity, right, that's effectively non-required, right?
Interesting. So the space is very cutthroat, right? Like, It is the most cutthroat space of all because it is the best business model in crypto. Are you a competitive guy?
I think I'm a very competitive guy.
Are you ready
Yes,
to risk it all to make extended win?
definitely.
All
I
right.
wouldn't do it otherwise.
Because I don't think the other founders care about anything else but seeing you guys lose.
I mean, from our side, honestly, we don't care much about competition, right? We just know that this is an amazing market, right? We know that the market structure will likely change in the long run because basically you have now Hyperliquid with like 80 or 90% market share. But if you look at the centralized exchanges, right, Binance is top 35% of perps volume among DeFi exchanges. And I think naturally, in the longer run, effectively DeFi perps will get to the same state, right? Just because it's such an amazing market, there will be new players coming in, right? Someone will win. We'll do our best to be that player, right?
Yeah, I agree. I mean, I think, yeah, right now it's not really. It's very much a one person take all kind of market.
Yeah.
But yeah, that likely shifts as you say.
Well, I'm curious how you think about that evolution, because usually it is a reinforcing flywheel. You have more taker volume, market makers come in, then you have better prices, and that attracts more taker volume. And so when you're thinking about the market share sort of starting to resemble centralized exchanges, how do you think, like, these winners, how do you think it breaks down where that market share starts to diffuse amongst the rest of the market?
Yeah, look, it's a great question, right? I think that fundamentally there are a couple of things to that, right? Like, one, there will be definitely users who are looking to find next Hyperliquid, right? And they are naturally the target audience of all the new perp dexes and of all the smaller perp dexes, right? And obviously we're also targeting those users, right? Because effectively they are ready to sacrifice efficiency, right, for the long-term opportunity, right? Let's say, yes, they will get a slightly worse liquidity, right, a bigger price impact, but they don't really care because in the long run, they are choosing who will win that market, right? That's one. Or who will be the second or third Hyperliquid, doesn't matter, right? Then the second way to win, I think, is to offer something which others don't, right? And in reality, I think like you just need to try, right? And you need to see what products will effectively stick with the community, right? So for us, we've done a couple of things in the past, right? So we've essentially launched TradFi markets. We saw that there is some uptake, but it's definitely not sufficient, right, to effectively win, right? Then now we're tokenizing our vulture. So potentially there will be users who will think, okay, I'll better go trade on extended because I can put my money into the vault. Those money will be working, right? And they can use that as the collateral, right? Then once we launch non-stable coin assets as the collateral, we'll effectively cater to a different group of users who will think, okay, now I can use I can put my WBTC to use on extended, right? And use it as a collateral, right? So effectively, you need to win through features, right? And finally, I think you need to remain humble and focused on the product, on the growth, right? Like, and be focused on the long-term success.
You need to remain competitive, highly cutthroat, and ready to eat what you kill. Someone's got to chip away at that market share, Russ, and I think it could be you guys. Man, thanks for coming on. Appreciate your time. Appreciate the work that you've done pushing this out into mainnet now. Looking forward to seeing the trading volumes grow, getting to that $1 billion a day mark. We all know it's possible. And yeah, man, I appreciate you.
Thanks a lot. Thanks, Andy. Thanks, Robbie. Right. Thanks for amazing questions. And thanks a lot.
Yeah, man. Keep that killer attitude up. Keep that thing strong. All right.
Sure. Thanks.
Thanks, Russell.
See you guys.
Alrighty, Russell.
See you next time.
Cheers, man.
Bye-bye.
See you soon.